This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Well, we're still nearly there, but you are going to do one last thing for me. But are we all clear where we are? During the month, you're just listing in one of those books. At the end of the month, the super bookkeeper appears, takes all the totals, and does the debit credit. But we do the debit credit in total. All right? Well, we're at the end of the month, and although we're not going to carry on and prepare the full set of accounts, do you remember last time that as soon as we've finished the debits credits, what does the accountant do? We take the balances and we list them. We do a trial balance to check things worked. So what I want you to do, please, the last thing I want you to do, can you go through each of the T accounts in the nominal ledger? If there's only one figure there, simply leave it, the balance on capital 10,000. But if ever there's more than one figure, can you take the balance? When you've got the balances, can you list them, please, on a trial balance? And again, to save paper, here you are. So again, it shouldn't take you many minutes. Things like the van, there's only one figure, so don't bother doing anything, just list it. Things like cash, there's more than one figure. Take the balance and list it. Okay? Okay, are we all okay there? Now we're going to leave it there, although in practice, of course, given the trial balance balances, and therefore we know that there's no double entry mistake, you know? Of course, then, like last time, you'd carry on and deal with accruals and prepayments, irrecoverable debts, inventories, and the other one, depreciation. Hello? Look as though you've heard of them. But they'd carry on exactly as last time. We're not going to repeat all that. This is just a way of speeding up the bookkeeping. And I think you've got to agree with me that if you are doing it by hand, it's just not practical. Think back to the beginning. It's not practical to go debit, credit, debit, credit, debit, credit thousands of times a day. We need the record. We list it in one of the books. It's at the end of the month we do the double entry in total. So are we all clear what's happening? A couple of things. First of all, you will never, obviously, ever be asked to do that in exams, ever. It can't be in this exam because it's ticking the boxes, but even in later exams, you will never be asked to write up these books. All right? The way they do test it, though, and the only way you can understand is by having done it, they will check you on that you know what the books are. And it can be confusing. I'm going to draw a picture after break. It can be a little bit confusing because if you think about it, we have a receivables journal. Do you agree? That was where I listed sales on credit. We have a receivables ledger where we had a note for each customer. We have a receivables account. Well, I'm sure you can imagine there's an awful danger of getting muddled up. Which one's which, yeah? Isn't there, Inessa? Yes. And so, I mean, it's only terminology, but I will do a picture which I think might help you remember it. But again, the only way you can see what I mean is by having done it. I think you can understand me. But they will check you know what these books are. And also, this will be an advantage. When you come to the auditing paper, F8, I'm sure you can imagine anybody checking these clearly has to know what these different books are, you know? Hello? And they'll expect, you know, in the auditing paper, there'll be things about how you might check the different books. Well, you'll be at an advantage because you'll know what the books are. People who are exempt from F3, they'll get all confused because of the names, you know. So, you're all clear with the idea? All right, a second thing. Hello? I know in real life, these days, we tend to use computers, obviously, and computers are capable of doing debits, credits each time. However, it depends on the software, but a lot of computer programs still effectively do this. You type in the payment, and very often the software will list it. Effectively, it's doing a cash payments book. And then at the end of the month, the software will do the debit credit. Okay? So even with computers, and they might use different names, but these books often exist. Some companies call them sub-ledgers and things. You know. Inessa? Mm-hmm. Stop it, please.
I'm really sorry.
Oh. All right. Some companies call them sub-ledgers. Call them what you like. Obviously, I'm using the ACCA words. All right? A third thing, or where I'm up to, in real life, I've said there are 4 basic types of transactions, obviously. Pay cash, receive cash, and so on. Obviously, there are others. For instance, if a company did a lot of returning goods, you buy goods, but they very often returned goods. Are you with me? Well, you can have another book, a returns book, and list the returns. Am I making sense here? So, you can have as many books as you like. These are the basic 4 which any company would need. But depending on the company, I'd say as many books as you want. A very common extra book, in fact. In our exam, I said last time, when I talk about cash, we're talking about all the cash, whether it's cash at the bank or whether it's NAUDA, loose cash. In real life, it would be very important to keep checks separately, and so that almost certainly they would have 2 cash payment books. One book where they were recording cash payments from the bank, and another one, loose cash. You with me? So it's not your problem. But I say again, in real life, the same system, but very likely there'll be more than just the 4 basic books. All right, last thing for the moment, something that's going to be important later. Clearly, especially when you're doing things by hand, there are a million mistakes you could have made. Not here, but you've got to agree with me. You could make mistakes like, we paid Chris 900. Easily, you might have accidentally entered only 90. Do you agree? Or mistakes like, you came to add up and you added up wrongly. Do you agree? Possible. Millions of mistakes you could have made. And of course, the more ways of checking things you've got, the better. One way of checking was the trial balance. But I told you last time, it doesn't find every mistake. Yeah? Here, we've got a terribly, terribly obvious little check we'd be silly not to do. In the nominal ledger, what balance did you end up with on receivables? Nobody's talking to me. In the nominal ledger, what balance did you get on receivables?
5,600.
I'm glad you're here, Liga. 5,600. Well, there's such an obvious little check we'd be stupid not to do. Did we not have one of our bookkeepers keeping a note of how much each customer owed us? We had a receivables ledger where you had a little T account for each customer, and at the end of the month you listed the balances. True? And surely the 2 totals must be the same. Would you agree? Now you might be thinking, of course they're the same. How could they be different? I'll tell you, I have to break. There are quite a lot of mistakes you could have made, and those 2 totals end up being different. But if the 2 are different, clearly somebody's made a mistake somewhere. Would you agree? You'd be stupid not to check. I mean, I'll tell you before coffee, one obvious mistake. Suppose you'd done everything perfectly, but you came to take the balance in the nominal ledger. Where is it? You may think I'm silly, but it happens. You took a balance and you added up wrongly. Possible? Fine. Well, you checked the list. The list said 5,600. You know immediately there's an error somewhere. Clearly, I hope clearly, the 2 have to be the same. Would you agree? And you'll see later today, that actually makes a nice little question occasionally, where the total here isn't the same as the list. And they tell you what the mistakes were and ask you what the correct total is. Now we'll worry about that later, but do you all agree? An obvious easy check, the two should be the same. And the same with payables, obviously. The balance on your payables account must equal the list of individual balances. If it doesn't, there must be a mistake somewhere. I said before break, nothing new here, but just because of this problem with the, I think you understood me, this danger of getting confused later, receivables ledger, receivables journal and so on, I'm going to draw a little picture. Now then, I know two of you haven't got the page for different reasons. Doesn't matter. Hello? Those of you who have got the page, I've left a lot of space on page 68. If you haven't, then have you got a piece of paper if you want to copy this down, both of you? Yeah? All I'm going to do is draw a little summary of the various books and how they fit in. And if you are taking this down, I am going to use sort of the whole page. You'll see I'm going to start in the middle, but then I am going to write something above and something below. All right? But think about what we did. The first thing we did was we listed every transaction in one of those four books. We had a cash payments book. Now I'm going to have to write small, so if you lose me, shout. But a cash payments book, a cash receipts book, a payables journal, and a sales journal. So not very pretty, but that's those four books. And every transaction was recorded in one of those books. I stressed at the time, these four books are not double entry. They were simply lists, no debits, no credits. And those four books, where we put the original entries, they're called either books of original entry, for I think fairly obvious reasons, it's where you make the first record, or the other name, books of prime entry. First entry. So books of original entry or books of prime entry, it was those four. Okay? We did one other thing though. At the same time, we needed to keep this record of how much we owed suppliers and how much customers owed us. And so we had two more books, which I'll write at the top. We had a receivables ledger. Oh dear, what's happened to my spelling? Receivables ledger. And the way I'll try and show that, that was the book where you had little accounts for Mr. X, Mr. Y, Mr. Z. We also had a payables ledger. Where again we had little accounts for each customer. Mr. A, Mr. B, Mr. C, whatever. You're all with me here? I hope I'm making sense. Well, these two books I must stress again, these were note only. They were not double entry. Even though they looked like T, well, we had little T accounts, it made sense, but they weren't real debits, real credits. I think you understand me. And where did we get the information from? Well, receivables ledger, we found from the sales journal what we'd sold, and we found from the cash receipts what cash they'd paid us. So that dotted line, I'm just trying to show, that's where we got the information from. And similarly, the payables ledger. From payables journal, we found out what we'd bought on credit. And cash payments, we found out what we'd paid to our suppliers. Am I making sense still? So the dotted line was just, I'm just saying, it was these four originally. We got information from there for these two. Those two books, they used to have a name, but this is very old-fashioned. But I will write it just in case, but I'll put a bracket round. We used to call these personal ledgers. But I put a bracket. I'd be very surprised if that was mentioned. But personal, because it was sort of individuals, you know. And these days, companies more like, but Mr. A, Mr. B, and so on. All right. Well, so far, again, no debits, credits. But what did we then do? At the end of the month, we took all those totals from the books of original entry from these four, and we actually did our double entry. And so below, we've got our nominal or general ledger. And this is where we had our actual T accounts. We had our cash account. We had our payables account, etc. And the way I'll just represent it, what did we do? When we paid cash to suppliers, for example, we took the information from the cash payments book. So you're taking information from each of those four. That's what the dotted line is. But although that's where you got the numbers from, the actual debits, credits, it was in the nominal ledger where you did the debit and the credit. Again, I hope I'm making sense there. And I hardly need write if you've understood me, but for completeness, of course, it's this book which is double entry. Now, just one last thing, but does it make sense, everybody? Oh. I hope it makes sense. All right, very last thing, although we stopped there, all right, we did a trial balance, but then stopped. I hope you're all aware from last time and from what I said before break, that once you finish the nominal ledger, you'd then do all your adjustments, depreciation, etc. It's from the nominal ledger that you'd prepare your income statement and your balance sheet. All right? So nothing new there, but I hope that makes sense. All right, just one final thing. Now, not for this picture, but one final thing related to that example. If you look back for a minute, or look at the screen, you don't need to turn back. I said before a break, and you all seemed happy, in the nominal ledger, you've got an account called receivables. I was playing there, the correct figure was 56. You've got an account called receivables where you've put everything in total. Total sales, total cash received. The total balance is 56. And of course that's the figure for the balance sheet. On the balance sheet you only ever show total receivables, total payables. You agree? Clearly, for practical reasons, we need to know who owes us the money. And so, you add your receivables ledger and your payables ledger. True? And as I said, the total should be the same, obviously. However, I'm sure you can imagine, there is a danger, if we're not careful, of getting confused. That if I say, oh, the balance on my receivables account, there is a danger. Do I mean the total receivables in the nominal ledger? Or might I mean something like Anne? In a sense, Anne is a receivables account. You understand me? Hello? You know, I've got little receivables accounts for each customer. And I've also got the total receivables account in the nominal ledger. Well, to avoid any confusion, the receivables account in the nominal ledger to avoid any confusion of wondering which one I'm talking about, balance on receivables is this. Do I mean Anne or do I mean the total? Standardly, we give it one of two names. The most obvious and the best name is simply total receivables account. That, I think, is perfectly obvious. That's what I always call it. There's absolutely no argument. If I mean Anne, I say Anne. If I mean total receivables, I simply call it total receivables. Sensible? However, it's got another name, which I'm afraid is less obvious. The other name for it, and this is where people get confused, the other name for total receivables is receivables ledger control account. I mean, I'll tell you why we call it that. It's because, again, the total of total receivables, it should equal the total of these individuals in the ledger. You with me? It controls it. However, you can see why people get confused. It's awful. You've got a receivables journal where you're listing every sale on credit. You've got a receivables ledger where there's an account for each customer. And you've got a receivables ledger control account, which is your total receivables, the T account in the nominal ledger. All right? There's nothing to worry about. It is just terminology, that's all. But do remember, please, if ever you see the word receivables ledger control account, it simply means total receivables in the nominal ledger. Are we clear? And I must write, but I hope very obviously, in exactly the same way, the payables account in the nominal ledger the T account, where the balance is total payables, we either call it total payables account, the obvious one, or, more commonly but less obvious, what do you think the other name for it is? Oh, I won't embarrass anybody. The payables ledger control account. So I promise you, there's nothing to worry about, there really isn't. It's just the danger of confusing. The minute you see the word payables ledger control, just remember, all it is the payables account in the nominal ledger. That's all. Okay? All right. All right, let's move on then and have slightly more fun. As I said, everything we've done in that chapter, it is important. They will check you on the words. You'll never be asked to do it ever, ever, ever. But I think you can accept, if I just stood here and mentioned these books, it really is confusing. The only way you can understand the books is by actually having done that little exercise. All right? So I beg you, take the trouble to look back sometime and check you've got it, and that you are clear what these different books are being used for. Okay?